right? You need to constantly try. I don't know how best to say it, but you need to constantly continue to practice, pick trades, no matter how much of analysis you are able to do, right? The beauty comes when you are able to pick the trade. Okay, the beauty comes when you are picking the trade. You won't be able to correct yourself when you are not picking trades, right? As amazing as backtesting is, as amazing as analyzing charts are, you must be picking trades, okay? And then if you find out that your confidence level can't give you the luxury to trade a live account yet, run up with a demo. Run up with a demo, apply the teachings, the knowledge you've been able to acquire, and you will discover that you keep getting better over time. You will keep getting better over time. So that said, on day one, we considered the foundations, trying to basically look at what it means to be a trader, how to get your journey started, how to get your game started as a trader, what to look out for when you're trading, understanding fundamentals. We talked about technical analysis, all of those things. Day two, we went deeper on the technical stuffs. We were able to touch demand and supply levels, and I think support and resistance. We didn't have the luxury of time to touch trend lines, but understand that they are diagonal support and resistance. Why I didn't really hammer on them is the fact that they are very, very subjective, right? Unlike your demand and supply level and support and resistance, that if I draw on the same chart and you draw on the same chart, we should be drawing the same thing, right? We should be doing the same thing for support resistance, irrespective of wherever you find yourself, irrespective of however you learned. If you are drawing support and resistance, and I'm drawing support and resistance over here and for an example, a Euro USD chart, it should be the same thing with what you are drawing, okay? The parameters might be slightly different, but yes, we should be seeing the same levels. But on the other hand, for trend lines are very, very subjective. People draw them based on how they look at the market. For an example, and this is why you can't really focus on them. You can't. Can you use them for additional confluence? Yes. For an example, someone could decide to say, oh, this is a trend, right? And obviously it looks very, very good like a trend, right? On the other hand, another person is looking at this portion and saying, oh, there's a trend here. And truly there's a trend over here, so it is very, very subjective. It's just going to be based on what individuals are seeing at every point in time, all right? So it's not always enough as an instrument to use in making a trade by us. Let me take this off. Yes, there are other things you need to learn about patterns, but unfortunately, we can't be able to cover that in the course of this live stream. Yesterday, we looked at Euro USD, and personally, I took a trade right here on Euro USD, putting my stop loss somewhere beneath here. We looked at the higher time frame. The higher time frame confirmed to us that yes, price was going to buy to the upside. Like we're expecting an increase in price, but eventually, what happened? Price first came beneath the level where we put our stop loss. Eventually, price moved all the way back up. Whenever you lose a trade, don't just go. The learning comes when you come back to look at it and say, oh, what happened? What happened? If you could see clearly here that price came back to that level, came back to retest the level, and here you had more buying opportunities, more buying opportunities right over here from the same thing we anticipated, okay? So when you lose a trade, you need to find out, was it a fake out of price? Was it that price pushed against me? Was it that I was on the wrong side of the trade? You need to always find out. These are things that you would continue to do, right? That's the only way you can always get better. You always want to know, okay, what happened? What went wrong? What didn't I do right? And I think the other pair we took a trade on was GBP JPY. And I was sharing immediately. I think we took a sell right? We took a sell in the class. If I can remember very well, we took a sell. I think it was from this level. I think price was here then when we took the sell, either here or here, I think. And then obviously we had our take profit happening. I shared that with the guys who are on the Pips Mastery group. You know, I think that happened so fast. Immediately we left off. So today, what are we going to do? We're going to repeat the same process. Today is Thursday. You want to come into the market. You want to look out for a trading opportunity. You want to make money from the market. What should be the first thing you want to do as a trader? I'm going to start again with Euro USD. And then the first thing I always tell people to do, I'm not going to base my chart because of what I had here drawn out, mapped out yesterday, and then come around today and say, yes, I want to trade based on my previous markups. I think it's a lazy way to do it, right? What I do every day, every time is I withdraw my chart, all right? So that's what we are going to do over again today. Remove all the drawings, start afresh, okay? Go over to your daily time frame. Look at what price did yesterday. This was the yesterday candle that closed. So looks to me like price is pushing all the way up to this level. Let me mark it with this horizontal line. I'm looking for the average point, okay? This is the way. All right, so I'm marking my demand level. So when price decides to come down, I know where to expect price to get to. And I want to believe that everyone, at least you've set up your MetaTrader 4, you know, you've been able to sync up your demo accounts at the very minimum. If you have a live account you're trading also, of course, there's no way you have a live account without knowing how to sync it up. All right, so I'm marking out on the daily level first, but we're not going to take our trades here. We're going down to the lower time frames to see what opportunities are bound and what to do right over there. Okay, for this to make more sense on this time frame, based on what I see on the H4 time frame, I need to adjust this to this place. All right. When the chart is too messy and you can't really find the head around it, just ignore it. Just ignore it and go to the other ones, okay? So there's another level here, but it's a minor level. So I'll just mark it with the tender line. You know. Then I know that price is coming all the way up here. Price is coming to this region. So what do we want to do? Let me go over to H1 and see what it looks like over here. All right. So for this to happen, for the buy to hold and the real, price needs to stay above this level. I don't know if you get what I'm doing right now, but if you watch the video over again, if you don't get it now, you'll be able to. Price needs to stay above this particular level, above this point. Why? Look at, if you have questions, you can always type them out. I'll read them up. You know, let me know your questions. So right over here, price needs to stay above this level. The candles that are being formed, the body of the candles need to close, especially this candle that we are waiting on, this H1 candle. The body needs to close above this zone, right, before you go ahead to initiate a trade. You need to be very, very patient to take this kind of trade. You need to be very, very patient. The body of this candle needs to close above this level, not just close above the level. It needs to close bullish, right? You need to have a strong bullish candle like this. this candle shows a strong bullish movement, right? And immediately after this candle, you could see the kind of movement we had, right? So we need to expect a bullish candle, a bullish pattern like this. This is also an engulfing candle. I don't want to bore you since I didn't really talk about them, but these are strong bullish candles. So you need to, when you're trying to buy, you're expecting an increase in price, right, from a particular demand zone. You need to see bullish patterns, right? You need to see bullish patterns that confirms to you that yes, the bulls are ready to take the price up, all right? On the other hand, when you are trying to sell from a resistance level, you need to see the confirmed bearish patterns, right? That supports the bias that you are trying to have on the trade. Okay, so while we wait for this, let me go over to analyze another pair. Let me do a pair I've not talked about all the time. What do we do? Okay. Let's do USD CHF. USD CHF. And I've consistently said the first thing you want to always look out for every time you open a particular chart, you want to understand the structure. You want to know what the structure is saying. So now we're on the daily time frame. We're on the daily time frame right over here. Yes, I'm trying to understand what this pair is doing. All right, my network tripped at the time, so all right, so looking at this now, I'm going to start taking from this level. I'll start considering from this level. All right, because if you look at this point, I think this was part of what we talked about on, is it day one? We already talked about market structure. So this is a clear, looks like a consolidation level. So this point, the market was consolidating. What movement led to this consolidation was a downtrend, right? A downtrend. And then ultimately we had price created a new high, right? Created a new high right over here, created a new high over here. So if you had looked at this, you would have started expecting an uptrend. But what happened? Price created a lower low right over again. And then the downtrend just continues from there. So our focus and our bias should be that this market is presently trending to the downside. Let me move to the far inside. So in this kind of market now, it's very easier for us to have a sell bias, all right? And where would our next expectation be for price? But the candles I'm seeing here are not looking nice at all. The stories these candles are telling, they are not looking good. The stories this candle are telling, they are not looking nice. They are not looking nice. Because this is a very strong pattern. This particular candle here is a very, very strong bullish pattern, right? Right over after this kind of pattern, you should be expecting more bullish momentum, pushing, creating new highs. Because look at this candle, this daily candle, for example, swallowed up this candle, swallowed up this candle. So it didn't just engulf this particular one, right? It also engulfed the one after it. So what do I want to start looking out for with the information I have at hand right now? Looking at this particular candle. When you see a candle like this strong engulfing candlestick pattern, you don't want to just overlook it in the market. So this is how I will anticipate this kind of trade now. Based on this time frame, I'll go to lower time frames to look for entries, no doubt. I'll start doing it this way. When you have an engulfing pattern of a candle, you want to expect that price will come back to retest the level of the candle, right? The candle before the engulfing candle, you want to expect that price will come back to retest it. It's a rule in the game. So I'll be expecting that price should sell back. When price gets back to this level, I'll be open to what? To take a buy. Let me look out for something coming. I don't want to make it complex, just trying. Okay, good. I've seen what I want to see. So expect that price should come back to this level, and very likely, very, very likely, we could have a strong continuation of the buy momentum all over again. Sorry, please. All right, so then at the top side, what do I expect? I will do this, mark out this level for price. So let's go down to H4 and look for where we can start making our entries into this trade. So right now, it's still very cool to look out for sell, because price is consistently creating lower lows. But the sell, definitely, when you get to that point I talked about, where I've already marked out, you need to be very, very careful. When price gets to this level, you need to be very, very careful. You need to expect it to either break to the downside, and it must break very well, either with an H4 candle, before you start looking out for a continuation of the downtrend, okay? So having this now, what do we do? Let's mark this point out. We can expect that price should come back to retest this point, right? You can expect that price will come back to retest this point and then sell back here. Okay, so that would be about how many pips if that happens? So you have about 60 pips to catch on this particular trade, with an expectation that it will play out as we're anticipating, okay? Because you don't want to buy this right now. You don't want to buy this kind of trade. This H4 candle has about 1 hour thereabout to close. You need to be patient. There's no trade yet on USD CHF as it stands. So you need to be patient. Expect that price gets to the key level, which is going to be here, this point, because look at this clearly. This is a minor level. I think ideally here. This is the ideal place. This is a minor level that price had created, broken through. We broke through with this. It must still be retested, still be retested. Then at the retest, you can conveniently take sales back right over here. Today is Thursday. You may expect that price, I don't know. Some people would see a situation like this and then want to scalp with a buy back to this level. All right. I'm not really very familiar with USD CHF, so I won't be recommending that. Neither would I want to try it. All right, is there a question so far? Or someone wants to drop a pair for me to look at, not some of the regular ones we've checked in recent times? I'm waiting. I'm waiting. Okay, so while I'm waiting, let me go over to, okay. All right, AUD USD. So let's look at AUD USD together. AUD USD is actually a good pair you can trade, honestly. The pair moves quite well, obeys structures a lot. May not be able to, it's not as volatile as GJ or your Euro JPY and the rest, no doubt. Obviously, when you look at this, based on what we've remarked, we know where to expect price. But let's just cancel it and then start. Let's mark out for the day and see what's up. Obviously, it's an uptrend. If you look at it from here, you know, price is creating an uptrend. So even all the way from so many, the uptrend is it's so obvious. So we should expect that price will break important levels to the upside. So having looked at all of these things, then the next question many people would like to ask is, then why do people lose money when trading? Why do people lose money when trading? And the most relevant thing I can say about that is risk management. Risk management. A lot of people don't manage their risk when they are taking trades. You want to come in with $100 account and you want to turn your $100 account to $1,000 in a day. You are trying to gamble, okay, and the market will always catch up with you. Because that's not if it was in that order, then every trader would just be a billionaire. Some people want to come in with, you want to turn your $500 account, you want to turn it to $10,000 in a single day. No, it's better to grow your account over time. It's better to grow your account over time. Use an appropriate lot size for your account. As much as possible, your risk levels also, you need to, put your risk level at a position where you are comfortable with, right? Where you are mentally and emotionally comfortable with. If, for an example, you have a trade that has about 20 pips stop loss, and then you know that, all you are comfortable losing is just $100 on the trade, you're not going to be throwing 2 lots, 3 lots, or 4 lots. If you know you are comfortable with only losing $10, you know that what you can lose and then you will not lose your piece is just $10, right? In an entire day or in an entire month. Definitely you need to bring your lot size, your risk level to suit where you know you are comfortable with. Very, very important. So that said, having looked at this, let me mark this one. This is a very good, candlestick pattern also. This one, it's a good pattern showing you that the buyers are still very, very aggressive. Buyers are still very, very aggressive in this market. Wow. This is what to do. In this market now, you need to wait for price because price has moved already. You need to wait for price to essentially break this level, comes back to retest. After the retest, this is where you now look up to take your entry. Okay, you are taking your entry after the retest of this level. Allow it to break, let it break. It will come back to retest this level. Then you can initiate your entry. Some people say that retest doesn't always happen or blah, blah, blah. Honestly, in the market, okay, I would attend to your question. In a market whereby there would always be a retest. Go back and backtest situations. There will be sudden breakouts. Yes, there will be times. Look at this for an example. This is a 4-hour candle. When you see a breakout like this, you feel, oh, price on move, or is never coming back. But look at the next 4-hour candle that followed. And look at this one, even pushing price a little bit below the level. Eventually, you would have been able to catch what? An entry point here, right? And even after pushing up, price came back to this level. So don't always believe that situation where people say, no, retest won't happen. Retest would always happen in an ideal market situation. So if there's no retest, price is just breaking through, you should know that that's an abnormal market situation. Okay, so you need to be able to know how to catch the retest of those levels. How do you catch the retest? I've emphasized when you have seen that, oh, this is a level and price has broken through that level. This is an H4 time frame now. So I'll go on H1. Let's sample this particular area. Let's sample this area. Want to sample this area, right? So I'll go on a lower time frame now to see what we can find over there. Want to sample this area. This is H4 time frame. So this is I want to show you the benefit of looking at the lower time frame, like maybe H1, and then we see. Look at after this breakout happened, we kept having cells. This sell candles. Look at this kind of candlestick pattern I talked about that I said is very, very important. You can see it right over here. Look at it. 1, 2. These are very important bullish candlestick patterns, especially when you find them on a zone. You're finding this kind of pattern on a demand zone. It tells you that yes, buyers are ready. They are still in charge of this market. The implication of a candle like this, if you go on a 30 minutes time frame, what this will mean is that you first had a sell candle, then you had a buy candle coming back to take price to the level. Let me look at this over again. Just try as much as possible. When you see a candle, try to understand what happened. I already talked about how candles are formed the other day. So if you, for example, if you have a candle like this, if this was a candle, pardon my drawing, what's this telling you? That price first, what? Price was selling, price was coming all the way down, but at the time the candle was about to close, price pushed all the way back up and the candle closed at this level. What does this tell you? It means there's a rejection, and that's what this is. That's what this is. These are good points to take what? Good entries into the market, right? Not every time you find, look at it repeating itself again, a rejection candle from a key level. Very, 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 very important. Very, very important. Look at this rejection candle from a demand zone. Very, very important. If you are taking a trade off this, what do? You put your stop loss maybe about 10 pips beneath this level. You ride your entry to the next level, and then you would be in profit that way. You'll be in profit when you take trades like that. Now, someone asked that at what point do you start increasing your lot size? It all boils down to your comfort level. And guess what? Our comfort level would differ from person to person. our risk appetite differs, what we can control differs, all right? For an example, if you see two guys who are trying to, maybe they are both, salary earners. Just let me draw this analogy. I hope it works right. Both people earning 500K. One has a family, maybe a family of 3. He has to cater for a wife. He has to pay rent. Then the other guy earning 500K, also they both work in the same organization, but this one, he doesn't pay rent. He's still single. He doesn't have a family he's responsible for. This guy won't mind going to club, maybe like twice in a month. He won't mind, buying expensive wristwatches, trying to, live like what you're earning. On the other hand, the other guy who has more responsibilities would be very, very, very economical with the way he spends. Let me bring it on to trading. So for an example, if you have another guy who, maybe this is not your first business, it's just a side business for you. You are able to you can lose $1,000 and then you are still very comfortable. It's like nothing has happened to you. On the other hand, there's another guy that $100 means so very much to you, right? You can't expect both of them to have the same comfort level. You can't expect both of them to increase their lot sizes at the same way. At another time, you have someone who is already earning. You've already started making money from trading, right? So you've made your capital back. You are trading with the profit of your profit, all right? You're already trading with your profit. You can't have the same emotions like someone who is just bringing his capital for the first or the second time. So these emotions would be there. They would always be there because real money is at stake here. On the other hand, when knowledge keeps increasing, your comfort level also keeps changing. Like when you're comfortable with the fact that, oh, you already know prices are the support. This is just a week. It's just, when you see patterns like this, you already know, oh, this is a strong confirmation on this trade, right? What can you do in situations like this? Once in a while, you overshoot your lot, it's just going to keep coming as you keep doing. Someone says, yes, sir, but sometimes the test may not happen in that trading. Yes, that's the thing. The retest may not happen. If, for example, we're trading London now, the retest, look at this for an example. Let's look at this scenario. Look at this breakout. This is 1 hour, right? Price already broke off this level. I know that there will be some idiots who would have taken a buy from somewhere here. People always do these things over and over, right? Because they feel, it will keep going up, it's already going up. But look at what happened. If you know that retest was going to happen, this is 1 hour, this is 2 hours, 3 hours now, 4 hours, 5 hours. Eventually at the 6th hour was when we had that, at the close of the 6th hour, that's when we now had that absolute confirmation to say, yes, buyers are still in charge. All right, so it's going to demand that you are patient. It's going to demand that you are patient. Look at this scenario also. You have seen a very good bullish pattern, right? Telling you going on a trade. Maybe you saw this first and then you feel, oh, it's time to go in on this trade. And then you took this trade. And then you took this particular trade, okay? Look at how many hours it took for price to actually hit this level. Look at, we had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. This is a lot of time. If you want to catch the entire move, it's a lot of time. All right. The same thing when you are waiting at times, you have to really, really ensure that you are waiting. This is why you can use, if you check out how to use TradingView very well, you can set alarm for price. Look at this. You can set alarm. You can add alert. It says when price gets to certain level, please let me know. Right? When price gets to certain point, you can change that over here. Say, for example, wanted to take a sell from 0.73711. You can just put that here. 73711. Where do you want the notification to be? Either on the app, either on the mail, wherever you want it to be, you can always get that notification. All right. Then if you use their premium account, they give you more luxury of where you can get your notifications, either as SMS, so many things are around that. All right, just saying. Okay, so we've checked out AUD USD, we've checked out USD CHF, we've checked out Euro USD. So let's look at GBP JPY, and then we look at Euro JPY for the day, and then that will be it for the month of November. Amazingly, this is my last training in the year 2020. Let me say my last public training, in the year 2020. The next one will be March 2021. Hopefully, God sustains our lives till now and beyond them. Definitely we'll get to do this more and more. So let's do GBP JPY first. All right. See how plain it's looking. It's an uptrend, no doubt. I think we talked about this yesterday, the fact that when price gets to this level, there will definitely be a reaction, which is there. You can see how it's playing already. Okay, so I don't want to assume that we cannot have a push to the upside. So let me just put this here to know where to expect price in case it breaks to the upside. So this one is just going to be there. So let's go to each one. All right, good. You can see the struggle for price, as price struggled at this level. As far as I'm concerned, this is a good bearish pattern, right? These are good patterns showing you that yes, price is at the level, but what's happening? Price is being pushed back down. Price is being pushed back down. These are, you have these candles are telling you this loudly enough that price is being pushed back down. Price is being pushed back down. Price being pushed back down. All right. But this one came to tell us that price is still struggling. Price is being pushed up. Don't forget, we understand that the major players in this market for now are still the buyers, yes, because of what we saw on the structure of the daily time frame. Yeah, because of what we saw on the structure of the daily time frame. Okay, so I will mark this level out. If I want to take a sell here and I don't want to play with my money. I won't take a sell here. I'm going to take a sell beneath this level until this level breaks. Until price breaks through this level, comes back to retest, that's when I can decide to take my sell. And I won't even want to sell all the way down here. All right? Why? You already understand that the higher time frames bias is still what? A buy trend. So I want to sell to this support level. I'll sell to this zone, which is where I'm selling to. And then when that happens, what do we still have? You will discover, especially with GJ, like small pips, small movement will still give you something very, very good. Imagine. This is about 100 pips. I don't even need all the 100 pips. All I want for the days, I want maybe 30, I want 40, and I'll be just fine, right? This market is going nowhere. I don't know some people try to, catch all the pairs, catch all the movements. That's not my trading strategy. My strategy and hope is always to keep it simple. Keep it very, very simple. The highest number of trades I've picked in recent time in an entire trading week was, I think, 12 or 13, right? 12 or 13. Usually 5 trades, 6 trades. That's where that's why I love to pick my trades. Just pick 2 winning trades. You are as good. You are good already. Okay. It's not in the multitude of trades that you pick. It's in the consistency, right? The consistency level of how your trades keep going. So this will be my expectation right over here. So this is actually not ready yet. But when I see a candle that closes bullish above this level, I can start considering a continuation of the buy trend. If you get me clearly so far, you understand the things I've been talking about. Can I please get a 1? Just type 1. You get me clearly. Okay, good. Okay, if you are not perfectly clear yet, can I get a 2 from you? Those who are just joining today may not have it so clear, but I'm sure that those who have been joining us from day one. But if you don't have it clear yet, let me know. I want to know. Just type 2, send in 2. Okay. Nobody yet. EUR/JPY, our last analysis. As compared with GBP/JPY, I prefer to actually trade EUR/JPY. I prefer to trade EUR/JPY. It's not as volatile as, of course, it's still volatile, but not as volatile as GJ. Whoa! Very similar to what's happening on GJ. Very similar. But the structure here is selling. That's the difference. So it would be cool to very similar structure with GJ. So you wait for the close of this candle, right? Wait for the close of this candle. I would even rather shoot a sell here. Once this H4 candle closes bearish, or I come over here, oops, look at whatever is happening here. Expect a break of this level. If it breaks this level, I'm just going to take a sell. I'll prefer to take a sell here than to take a sell on GJ. The first level is about 30 pips. Next level is about 50 pips in sales. All right, so execution is the next thing. When you see a candle like this, I'm never perturbed. This candle that is presently forming, no wick. When I see candles without wick, I already understand that, okay, they are not really very, very strong. Always check them out. Everywhere you see a candle with that wick, either at the bottom or at the top, they don't usually really convey so much information. As a matter of fact, many times they tell you, it's a mirror, like expect the opposite of what is happening here. So if this candle closes without a wick at the bottom, only the wick at the top, I'll still hold on to my sell bias very strongly. All right, so yes. Any question, contributions before we call it a morning, call it a day? Questions, contributions? Okay. If your background is okay, I'll unmute you. All right. Please go ahead.
Yeah, there's something I want to ask here. The Euro JPY, because I'm just starting new. I'm new to the trade. So the risks. I'm talking about the risk management. If I'm to trade, if I'm to take a buy here, how do I calculate the risk management? Like, the ratio reward or something. Like, if I'm, according to your video that I watch, it says I can put, if I trade 1, I can get in return of 2 or 3.
Okay. I think I get your question. You're asking about risk to reward ratio, right?
Yeah.
Okay, good. Okay, good. All right, I would attend to the 2 questions. Let me pick this first. There's a tool right over here, but I don't use it, right? I don't use it. If you look at this on TradingView, long position, short position. So if you are trying to long, which is the same thing as buy, you can pull this up. If, for an example, you are open to buy this, which I'm not saying you should, because this is not looking like a good buy trade. So you can come right over here, use this tool to try to So you put this at your entry. Say, for example, you are entering this trade right here. You know that your take profit level should be here, just a few pips beneath the level. And then your stop loss should be, maybe if you're doing a stop loss of maybe something like this, few pips beneath the level also at the base. This has automatically been able to help you calculate your risk to reward ratio, okay? Tells you that your target is 0.156, your stop loss is 0.145. With this, I think you're risking about, the trade is about ratio 1-to-1, right? 14.5 to 15.6. This is, for an example, this is not a good risk to reward. It's about ratio 1-to-1. So if, for example, you entered here 15 pips, you put your stop here, that's still about 15 pips also. Doesn't mean you can't take this trade. You can, right? You can still take this kind of trade because it's 1:1, right? But the next question you want to ask yourself is, is it worth it? In this situation, a buy here is not a good risk at all because the overall structure is selling. Overall structure shows that it's selling. Overall structure also shows that what? You should focus on sales, right? So in a situation like this now, if I'm about to take a sell, what do? I don't usually try to calculate my risk to reward like a lot of people try to do. Does it mean I'm doing it better? No. Does it mean they are doing it better? No. Just know what you are comfortable with and what works best for you. Okay. I know that I think it's Eyitemi. Eyitemi always calculates every of his trades to ensure that he's only risking 3% of his account on every trade. You know, I don't trade in that dimension, but I'm a very conservative trader. Okay. I still don't excessively throw lots around. Let me do this example as a final one to answer your question. So if the sale begins now and then I'm expecting that price will sell. If I'm expecting that price will sell back to this point, that price will sell back to this point. For me, I'm trying to calculate, okay, how many pips will be in for me? So it's the trade potential is about 25 pips, right? About 25 pips. What do I want to do? For someone who is trying to know, okay, what's the risk to reward ratio, maybe pulling up these two, then trying to identify, okay, where would I put my stop loss? Say, for example, you want to put your stop loss above this candle. You want to put your stop loss above this candle. And you're looking at the trade. Just a second. So if you are making your entry here, sorry, if you are making your entry here and then you are putting your stop, say here, what do you have in here? Your stop loss is about 17.6 pips. On the other hand, your take profit is about 25.6 pips, okay? In here, it's already calculated for you. It tells you your risk to reward ratio is what, 1.45. Can you see that? Your risk reward ratio is 1.45, right? So that's it basically. You can just use this tool. On the other hand, you can have it known mentally. I like to always, that's the way I do it. I like to always have it mentally. If I'm picking a buy here, for example, after seeing this rejection candle, and I want to take a buy to this level, I look at, okay, what's in for me is about 40 pips trade. Where am I putting my stop? Beneath this week. That's how many pips? It's about 25 pips. Next question I ask myself is, do I want to take a trade that has 25 pips stop loss? If the answer is yes, what lot size do I want to use? If I say, okay, I'm going to use a lot size of 0.2. Lot size of 0.2 with a stop loss of 25 pips, that's how many dollars? $50. If I win the trade has for me 40 pips, that's $80. You want to look at it and say, okay, do I want to take that kind of trade? Or rather, you go look out for a trade whereby the risk is about 15 pips and then the profit ratio is about 45 pips. I hope that answers your question, please. Then the other question someone asked, let me read that out. Someone says, what is the level of retracement that one must have before concluding that there's a change in trend? The only way to conclude that there's a change in trend is break of structure. Conclude that there's a change in trend is break of structure. Excuse me. And what do I mean by that? In an uptrend, you have this situation. All right. You keep expecting buys. But when you have this sort of situation, look at this. It's been uptrend. Then now you have this. At this point, you don't have a new low yet. Look at this point. You don't have a new low yet. You can't conclude that what structure has broken, right? You can't conclude that structure has broken. It could still happen this way and go all the way this way. It's still what? An uptrend. But when you now have a situation where if you now have this sort of situation, and then price pushed, now you have a lower low. Structure has clearly broken now. Structure has broken, right? That's when you can say there's a change of trend. Don't forget, in an uptrend, you will have selling opportunities. In a downtrend, you will still have buying opportunities. But for you to conclude and say that structure has broken, that's when you can say, oh, this is a change of trend. All right. And once you have that, now it makes sense this way. When this was happening, you were saying this is higher high. But now that structure has broken, this has changed. Right? This has changed also. This is now a lower high. This is a lower high. This is a lower low. This is a lower low. Lower lows. Because why? Structure has changed. Let me look for a situation like this on this chart. So we see where structure changed. Structure can break and change on any time frame, okay? So look at this for an example. I hope you're following. So if we take it out this way, this created a new high, no doubt, but did it continue at higher highs? No. Then what happened there? Lows, you can see lower lows, lower lows. Then what happened there? See, you had the first higher highs being created. This is where structure changed. Because now price came here, kept doing this, structure changed here. Did it continue as a change? That's another debate for another time. Look at this, because eventually price pulled back into the structure, then continued eventually. And then we have the conspicuous change of structure. The conspicuous change of structure happened from this point. From this point, this asterisk region, that's when we now had the continuous change of structure, right? But structure also changed here because we had a high, we had higher highs being created, but eventually price pulled back in. You know, it still didn't break this low point. Yeah. So there are complexities sometimes when we talk about market structure, especially on lower time frames, right? Especially on lower time frames. But you can always look out for this structural change on any time frame, because it's all a build up. H1 builds up into H2, H2 builds up into H4, H4 builds up into daily, daily builds up into weekly. It's all a build up in order. I don't know if that takes care of the other question that was raised. You can see the structure. Upon zooming in, you can see the successive, you know, it just tells you this is happening, it's going on. It's going up, even though they did create a lower low. I'm not sure yet. Let's zoom to the other hand. You know, still range, then continue to go. Brrr. Okay, good. All right, so shout out to everyone who's been a part of this. Thank you very much for finding so much value in everything I do and share. God bless everyone. It's been amazing. My next public class, like I said, typed a question earlier, but I'm not sure if it can. Oh, the question didn't come through. The question didn't come through. You can quickly ask. You still have the opportunity, promise. Okay, how to properly manage a profitable trade. Okay. One of the first things you can always do is when your trade runs into profit, say you're already up about 15 pips, 20 pips. The least of all things you can do is move your stop loss first to your entry level. Move your stop loss to the entry point. With that, you are not, it means you are having zero risk on the trade. You are not going to be losing a kobo, even if the trade decides to go against you. Would there be times whereby your trade will go back to hit your stop that is at entry? Yes. And then sometimes it happens that way, that it hits your stop loss, then goes all the way, continues back into profit region. So you need to find out, look at the kind of, what candles have closed yet? Is it an H4, H1 candle, or you're only monitoring your trade based on M15 or M30? Those ones could be very, 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 very trickish. All right. Then some people add up positions. I do that once in a while, but you need some level of skill to do it, because sometimes it won't end well. Sometimes it won't end well, that you already have a trade that is giving you money, making money for you. And then before you know it, it's up 30 pips. You feel, oh, let me add more position. You add the next position, it's up another maybe 5 pips. Before you know it, now it's coming back to you. And because number one, sometimes you may not be comfortable with taking any loss at all, because the fact that you have started seeing profit. So where do you want to put your stop loss for the second entry? Are you comfortable with putting the stop loss back at the first entry level? These things could be very, very dicey. Of course, you need to find a way. It comes only with experience. It comes with experience. I don't add positions to all my trades, especially because I know I'm a scalper. I'm trying to catch 30 pips. So where am I going to add the extra position? Is it after 15 pips or after 20 pips? But when I look at the trade and I feel, oh, this is going to be a very long ride, this is when you may now start looking at adding extra positions. The first thing first is try to be profitable with your maybe double positions that you took at entry, right? Sometimes maybe I want to take a trade with 4 lots. I can take 0.2, 0.2. I can take 0.2 first, then 0.1, 1.0, 1.0. Why? Because I want to just have more confidence in the trade sometimes. So I want to be monitoring them in a very easier way. So sometimes I get to do that. So if you look at instead of you adding positions along the line, why not look at, okay, if price is maybe M30 closed and price at a demand level, sometimes I launch in with my first entry. If it makes very strong retracement, I can enter the second time. But always know that the more the position you're adding, the more risk you are putting on your account. So you need to do it very, very carefully and systematically. Not everyone can actually do it. It's not going to end up profitable for everyone. Ensure that you have mastered how to be profitable first with your single positions. All right. That's when you can begin to take things to the higher level by adding extra positions. All right, that's the last question. Thank you very much, everyone. See you in March, or see you, for those who have private sessions with me, see you in your private sessions. Yeah, it's been amazing. Thank you.